Bitcoin has just surged past $81,000, hitting a new all-time high on November 10th, with a solid 6.15% jump, bringing Bitcoin to an impressive $81,358 on Binance. And even though it has slightly cooled off towards the $80,000 level at the time of recording, this milestone is a huge deal for the crypto community. But what's driving this incredible surge? Well, it's a mix of factors, but one major player is the recent US presidential election. With Donald Trump winning the election on November 5th, Bitcoin enthusiasts are feeling optimistic. Trump has a reputation of being crypto-friendly, and many believe that his administration could usher in a more favorable regulatory environment for cryptocurrencies. Now, let's delve into the Crypto Fear and Greed Index, a key indicator of market sentiment. On November 10th, the index hit a whopping 78 out of 100, landing in the extreme greed zone, the highest it has seen since April 12th. For those who might not know, the Fear and Greed Index measures things like market volatility, trading volume, social media sentiment. Bitcoin's dominance and tends to gauge whether the market is feeling fearful or greedy. A score of 78 indicates that investors are feeling extremely optimistic and extremely greedy, which often signals that the market might be overbought and due for a correction. Interestingly, this peak coincided with Bitcoin crossing the $81,000 mark, showing a strong correlation between Bitcoin's price surge and investor sentiment. However, the next day, so basically November 11th, the index slightly dipped to 76, still firmly in the extreme greed zone. This slight regression suggests that while the initial excitement has tampered a little bit, the overall sentiment remains insanely bullish. Another fascinating piece of news is that Bitcoin is starting to trend a little bit more on Google. With over the past last week or so, search interest in Bitcoin has risen substantially, indicating that more retail investors are waking up and taking notice. While it's still not back to its peak levels that were seen in the last bull run in May of 2021, with the current search interest scoring 48 out of 100 compared to the all-time high, it's a positive sign that Bitcoin is regaining mainstream attention, regaining mainstream attention. Now, with this uptick in search interest, it's fueled by the combination of Bitcoin's price surge and the hopeful prospects tied to Trump's election victory. People are not only searching for Bitcoin's price, but also for information on how the new administration might impact Bitcoin and the crypto landscape. Now, speaking of the election, let's explore how Trump's victory is expected to influence Bitcoin's future. With Trump winning more than 270 electoral college votes and the majority of the popular vote, many analysts believe that his administration will be more supportive of cryptocurrencies. Trump has openly expressed his desire to make America the crypto capital of the world, which could mean more favorable regulations and policies for Bitcoin and other digital assets. Additionally, there's speculation about changes in the Securities and Exchange Commission leadership. Mark, an SEC commissioner known for his criticism of the SEC's aggressive regulatory stance, is seen as a potential replacement for Gary Gensler as the kind of SEC chair. Now, if this change happens, it could lead to more accommodating regulatory environment for cryptocurrencies, further boosting investor confidence and Bitcoin's price. Now, let's talk predictions, right? 𝗕𝗘𝗪, head of research at 𝗕𝗘𝗪𝗀, has some bold forecasts. He believes that Bitcoin could reach $100,000 by the time Trump is inaugurated on January 20th, 2025. According to his valuation models, this isn't just a wild guess, it's a plausible outcome given the current market dynamics and anticipated regulatory support. But, of course, not everyone is on board with such optimistic forecasts. You've got Keith, co-founder of Material Indicators, expressed some skepticism, saying degens are degenging while examining order book data. He is cautioning, I should say, that while the price is soaring, investors should remain wary of potential volatility and the possibility of a sharp correction. So how is the crypto community reacting to all these developments? On platforms like X and Reddit, the sentiment is a mix of excitement and caution. Many Bitcoin enthusiasts are thrilled about the ETF surge, which we'll talk about in a moment, and of course Trump's win, seeing it as a green light for Bitcoin's continued ascent. You'll see things like posts saying that Bitcoin to the moon and 100k Bitcoin is on the horizon. They're flooding in, reflecting the strong bullish sentiment that is out there. However, there are some voices of caution reminding everyone that the crypto market is notoriously volatile. Comments such as 100k Bitcoin possible, but let's stay realistic, and great volume, but let's watch out for some market fluctuations, highlighting the balanced perspective that many investors are adopting. It's a classic case of high risk, high reward, and the community is buzzing with discussions on both sides. So what's the big takeaway from all of this? Well, Bitcoin's recent surge to $81,000 and the crypto fear and greed index hitting a 7-month high of 78 indicate a strong bullish sentiment in the market. With the potential support from a Trump administration and the increasing interest from retail investors, Bitcoin is positioned for some exciting times ahead. However, it's crucial to stay informed and cautious. The crypto market is highly volatile, and while the prospects are bright, there are always risks involved. Whether Bitcoin will reach $100,000 mark remains to be seen, right? And the current indicators suggest that the momentum is insanely strong. For those holding Bitcoin or considering investing, keeping an eye on key support levels around $63,500 and the $65,000 will be essential in navigating the upcoming market movements. And as always, diversifying your investments and staying updated on market trends can help you make more informed decisions. Now, let's talk about Bitcoin's dominance in the ETF space this year. Bitcoin has dominated the ETF landscape in 2024, accounting for 6 of the top 10 most successful launches. Nate, a market commentator, highlighted his trend, or this particular trend, emphasizing that Bitcoin's continued strength and popularity among investors. A major player in this surge is BlackRock's iShares Bitcoin Trust, the IBIT. On November 8th, IBIT recorded daily net inflows of nearly $1.4 billion. Just the day before, trading volume for IBIT reached an all-time high. According to Bloomberg ETF analyst Eric, this means that IBIT saw $1 billion in volume in the first 20 minutes after Trump's election now, or win, I should say, and victory within the US election. Now, about what it typically moves in an entire day. So 1 billion would be usually a typical movement, and we saw that within the first 20 minutes. This massive influx is a strong indicator of institutional confidence in Bitcoin. But BlackRock isn't the only one. Asset managers have been filing to list ETFs, holding altcoins like Solana and others, seen as cool options on a Trump victory, which basically means that they're betting that Trump's win will create a more favorable environment for these crypto assets, potentially leading to more ETF approvals and greater market growth. Another interesting development is that Bitcoin is starting to trend more on Google, as we spoke about, over the past week or so, with search interest for Bitcoin has risen substantially, indicating that more retail investors are waking up and taking notice of Bitcoin and the crypto market. While it's still not back at its peak levels that we saw back in the previous bull run in around May 2021, with the current search rates or search interest rates soaring at around 48 out of 100 compared to the previous all-time high. It's a positive sign that Bitcoin is regaining that mainstream attention that we need. Now, this uptick in search interest is fueled by a combination of Bitcoin's price surge and the hopeful prospects tied to Trump's election victory, right? Now, people are not just searching for Bitcoin's price, but they're also searching for how this new administration might impact the crypto market, which is a positive sign. Now, with Bitcoin crossing the $80,000 level, many analysts are now setting their sights even higher. You've got head of research over at 𝗕𝗘𝗪𝗧 who has some pretty bold forecasts that he believes that Bitcoin could reach $100,000 by the inauguration date, so 20th of January 2025. And according to his valuation models, this isn't just just wishful thinking, but it's actually quite possible considering all the market dynamics that we currently see and the anticipated regulatory support. Of our other crypto analysts, they've basically kind of come in and cited the Bitcoin's trajectory to establish record highs within 50 to 60 days after the US elections, suggesting that Bitcoin could reach $100,000 by January if the current market trends continue. Meanwhile, of course, you've got other analysts as well. Dr. Profit, for example, an analyst at Material Indicators, who pointed out that the market current buying speed, 60,000 BTC bought by retail investors and 1,800 BTC bought by BlackRock, and only 450 BTC mined each day, Bitcoin's limited supply could drive the price even higher. However, not everyone is on board with these optimistic predictions. You've got Keith Allen, co-founder of Material Indicators, expressed some skepticism, saying that degens are, of course, degenning, while examining order block data and book data. He's cautioning that while the price is soaring, investors could and should remain wary of potential volatility and its possibility of a very sharp correction. So how is the crypto community reacting to these particular developments? Over on X and Reddit, the sentiment is mixed, as I said earlier. Many Bitcoin enthusiasts are thrilled about this surge in ETF volume and, of course, Trump's victory, seeing it as a green light for Bitcoin's continued ascent. You'll see a lot of posts like Bitcoin to the moon and 100K Bitcoin on the horizon flooding in all over social media platforms with a very strong bullish sentiment. However, there are voices of caution reminding everyone that the crypto market is notoriously volatile. Comments, as I said earlier, 100K Bitcoin is possible, but let's stay realistic, and great volume, but watch out for those market fluctuations, highlight the balanced perspective that many investors are adapting to. Now, it's a classic case of high risk, high reward, and the community, of course, is buzzing on both sides of the argument. So what's the big takeaway with everything that's going on with Bitcoin reaching and surpassing $80,000? And of course, you've got the crypto fear and greed index hitting a 7-month high, the ETF inflows. There's a lot of things to be positive about. However, it's crucial to stay informed and cautious. While the regulatory environment might become more favorable under Trump, the crypto market remains volatile and influenced by a whole host of different factors. Diversifying your investments and keeping an eye on market trends will be a key to navigating the exciting yet unpredictable times ahead. For those holding Bitcoin or considering investing, these insights offer a glimpse into what might lie ahead. Whether you're a bullish supporter or a cautious observer, understanding these key levels and market sentiments can help you make more informed decisions in the ever-changing crypto landscape. Let's talk about MicroStrategy, the company that's been making waves in the Bitcoin world. If you haven't heard, MicroStrategy's Bitcoin portfolio has just surpassed a whopping $20 billion in value. That's right, their stash of 252,200 Bitcoin is now worth $20.54 billion, giving them a return on investment of more than 104%. Talk about a successful investment strategy. But how did they get there? Well, MicroStrategy has been on a relentless mission, buying Bitcoin 42 times at a dollar cost average of $39,292 per BTC, according to Bitcoin Treasury's data. Now, this consistent buying has paid off big time, making them the largest corporate holder of Bitcoin by far. Far behind them are Bitcoin miners like Marathon Digital with $2.1 billion and Riot Platforms holding $840 million worth of Bitcoin. And they're not stopping there. MicroStrategy is looking to raise a massive $42 billion over the next 3 years to stack even more Bitcoin under their ambitious 21-21 plan. This includes $21 billion in equity and $21 billion in fixed income securities. With Bitcoin currently priced at all-time highs of around $81,500, it's clear that this strategy is paying off handsomely. But it's not just MicroStrategy riding the Bitcoin bull run. You've got other people such as 𝗕𝗓𝗪, which are also reaping the rewards of their Bitcoin investments. Let's start with the small Himalayan country that has been busy building a large-scale Bitcoin mining operation and is using Bitcoin as a strategic currency reserve. According according to Arkham Intelligence, you've got Bitcoin holdings that now surpass over $1 billion, accounting for 32% of its 3.15 billion GDP. That's a significant portion of their economy backed by Bitcoin, showing how seriously they're basically taking their crypto strategy. On the other side, we have El Salvador, the first country to adopt Bitcoin as legal tender. Their Bitcoin holdings stand at 5,930 BTC, now worth over $482 million. This makes or marks an 80% increase in their value, and with nearly $214 million in unrealized profits, despite facing some bumps along the way, like the crypto market tanking in 2022 and media criticism, El Salvador remains committed to their Bitcoin strategy. They continue to dollar cost average by buying exactly one Bitcoin per day, and are stacking Bitcoin through their passport program and revenues from their volcanic Bitcoin mining venture. It's a bold move that shows their dedication to integrating Bitcoin into their national economy. Looking ahead, both MicroStrategy and these countries have ambitious plans to further their Bitcoin investments. MicroStrategy's 2121 plan is a testament to their long-term vision, aiming to continuously increase their Bitcoin holdings and solidify their position as a major player in the crypto space. Meanwhile, you've got places like El Salvador, which are not planning on just sitting back. You've got large-scale mining operations and strategic reserves use Bitcoin to strengthen economies, while El Salvador's consistent daily purchases and innovative programs are paving the way for Bitcoin to become an integral part of their financial system. These strategies highlight the diverse ways that different entities are leveraging Bitcoin to drive economic growth and stability. So how is the crypto community reacting to all of these developments? Well, the sentiment is mixed, a mix of actual admiration and curiosity. Many investors are impressed by MicroStrategy's disciplined approach or investment approach and the substantial returns that they've achieved. Posts like MicroStrategy is crushing it with their Bitcoin strategy and $20 billion in Bitcoin. That's some serious dedication. Then these kind of comments are buzzing all over social media. On the flip side, some community members are cautious about how sustainable these kind of strategies are in the long run, essentially, or especially with Bitcoin inherent volatility, right? Comments like, can MicroStrategy keep stacking Bitcoin at this pace? And interesting moves by El Salvador with their Bitcoin reserves reflect a balanced perspective, recognizing both the potential but also the risks that are involved. Overall, the community is excited to see how these large-scale investments will influence Bitcoin's future and whether other corporations and countries will follow suit. It's an exciting time to be a part of the crypto world, that's for sure. Let's talk about some intriguing news from 𝗕𝗘𝗪𝗀𝗀. 𝗕𝗘𝗪𝗀𝗀𝗀, hopefully I've pronounced that right, the CEO of 𝗕𝗘𝗪𝗀𝗀𝗀, has made a bold prediction. He believes that Bitcoin could end the year at just under $59,000. Yep, you heard that right. In a post on X, formerly known as Twitter, on November 9th, Key shared his thoughts, highlighting that the futures market is overheating, which he thinks is setting the stage for a potential price tumble. Key mentioned that Bitcoin is entering a phase of price discovery and that the market is heating up even more. While he acknowledges that if there is a correction and a consolidation, the current bull market might extend. He warns that a strong end-of-year rally could set the stage for a bear market in 2025. He even threw in a little wager, offering 0.1 BTC to the person who can guess the closest end-to-year price. Talk about confidence. So why does Key think the futures market is overheated? Well, according to him, the sheer volume and open interest in Bitcoin's futures are reaching record levels, and CoinGlass data shows that Bitcoin has an open interest of nearly $50 billion in derivatives like futures and options. This massive open interest indicates that there are a lot of active positions, which can lead to increased volatility. When the market feels this overheated, it's ripe for a correction. But hold up, what does that really mean for Bitcoin investors? Essentially, Key is saying that with so much money flowing into Bitcoin futures, the market might be getting ready for a significant pullback. It's like when a balloon gets too much air and it's about to pop. However, Key isn't entirely bearish. He believes that a correction could actually extend the current bull market before things really take a downturn. But not everyone is seeing things the same way. Enter Ben Simpson, the CEO of Collective Shift. Ben is here to throw a wrench in Key's prediction, saying that a major pullback to 58k is very unlikely by the end of the year. According to him, several factors are contributing to Bitcoin's bullish momentum. Ben points out that with Trump's re-election, interest rates coming down, and the potential for quantitative easing in the future, the crypto market is set for more growth. Plus, the consistent daily trading volumes for Bitcoin ETFs like BlackRock's ETF moving billions and attracting more investors and stabilizing the price. In his words, with a limited supply asset like Bitcoin and the increasing demand, the space is only going one way. He also mentioned that while corrections of 20 to 30% are normal in previous cycles, this time around the pullbacks have been milder, around 5 to 6%, suggesting a stronger market structure that's better equipped to handle volatility. Let's take a quick look at where Bitcoin stands right now. At the point, or at the latest data from CoinGecko, Bitcoin has surged to an all-time high of around $81,600 at the point of recording. This impressive rally has pushed Bitcoin's performance to its best weekly gains since February, thanks to a large part to Trump's re-election and, of course, the bullish sentiment surrounding it. Additionally, last week saw a whopping $1.6 billion in net inflows across 11 spot Bitcoin ETFs, with November 7th being the largest inflow day on record, according to Farside investors, right? Now, this influx of institutional money is another indicator of the strong interest and confidence in Bitcoin's future. So how is the community reacting to these contrasting predictions? On platforms like X and Reddit, the sentiment is a mix of excitement and caution. Many Bitcoin enthusiasts are thrilled with the price surge and the potential for it to reach new heights. You'll see posts like Bitcoin to the moon and 100k Bitcoin coming, reflecting the bullish optimism. However, there are some voices of caution, as I've mentioned many times today. Some community members are echoing Ben Simpson's skepticism, reminding everyone that the crypto market is highly volatile and that prices can swing both ways. Comments like "great rally, but let's not get too greedy," and "watch out for that correction" are common, showing that there's while there is optimism and the optimism is high, there's also an awareness of the risks that are involved. So what's the big takeaway from this development? Well, Bitcoin's rally to 81k and the divergent opinions from analysts like 𝗕𝗓𝗪𝗓 and Ben Simpson highlight the dynamic and unpredictable nature of the crypto market. While some foresee a potential dip back to 58k due to an overheated futures market, others believe that Bitcoin's strong fundamentals and increasing institutional interest will keep the momentum going. For investors, it's crucial to stay informed and keep an eye on those key support levels around the 200-day SMA, that's approximately $63,500, and the short-term holder cost basis, the STH-CB, at around $64,500. Understanding these levels can help you navigate the upcoming market movements, whether it is a continued bull market or a necessary correction. Ultimately, though, Bitcoin remains a powerhouse in the crypto space, and the future looks insanely bright, albeit with some potential bumps along the way. Whether you're holding strong or considering jumping in, staying updated with the latest analysis and community sentiment is key to making informed decisions. Let's take a look at the Bitcoin chart, and I'll share my thoughts and opinions on where I think the price action's heading. Okay, guys, we're going to kick things off right here. This is Bitcoin paired up with USDT. We're on the one-day Binance chart. And following on from my previous videos, I was concerned about the ascending wedge pattern, and the good news is we have broken out significantly from there. There is now more of a parallel channel, so I'm not too concerned about that anymore, which is good. The move to new all-time highs we can kind of see, but the push higher towards this current price of 81,359 is insanely good. So let's go ahead and just reflect on a few things that are going on here and some of the areas that we should be aware of and some of the concerns that we need to be aware of in the price action before I go into to where I think the price is going to be heading next. Okay, so as we can see from our August 5th low, which is actually quite a nice low point down at $49,000, and this move to the upside here was a 67.03%, a good strong move for Bitcoin. There of course were a few corrections in here, right? We can see that we did have a drop of 19.15%. That was from the highs that we saw at the end of August down to the beginning of September. We then saw another correction up here as well, coming in at 11.36. We then saw the double top situation and a correction up here as well. This correction was coming in at the kind of low of around 9.22%. Okay, so what is really interesting about that is a good surge to the upside, but it's not straight line moves. We do see that there are corrections on the journey to the upside, right, which is good to see. The overlapping nature of the price action does have me a little bit concerned. Okay, so we can see here that we have had a very interesting structure. Let's go into that in a little bit more detail. Okay, so as I was talking about in the previous videos, we were looking for some potential divergences, and we were actually seeing that the market was getting ready for a big move. It didn't tell us which direction things were going to go in. We were either going to break up or we were going to break down. With the election and Trump's victory, it was clearly going to be a move to the upside, as we covered in the previous videos. Now here we can see a good three-wave move to the upside, three-wave correction to the downside, three waves up, three waves down, and you can see a very choppy corrective pattern. But this is a very interesting structure right here, leading us into this most recent move. Okay, so if we go ahead and measure some of these distances, specifically this one right here, and we move this over to this side, we can see that this particular correction has already surpassed 1.382 and is on the journey to 1.618. But it's not an impulsive move because we don't have the internal structures to support that. Okay, so we only have three-wave structures. But if we take the three waves from over here, okay, and we move this into this correction, here we can see that we're just coming up into this typical range. And so we would actually be looking for a correction. I would be quite optimistic of finding a correction actually in this range between 79,952 and 85,926. That does mean that we have potential continuation a little bit higher before having a bit of a cooling off. That cooling off doesn't have to be major, right? We can see that we did have a 19% move, 11% move, 19% move, and a smaller percent moves. So it doesn't have to be anything major, but I do think a retest of these previous resistances, specifically this range down here between the 68 and 73, wouldn't be too far off. If we kind of say 85k and we come back down to the previous all-time high area that we had back in March of 2024, it would only really be a 13% dip before taking off back again. And like some of the other analysts are saying, ultimately a correction would actually be really beneficial to the price action of Bitcoin in the longer term. We can take the short-term gains, but actually we don't want a kind of real big surge right now. We actually do want an end of year cooling off. Okay, so I do see, and as I have said many times before, and I'll probably bring up the chart in a moment, with the US election, we typically do find green after the election, lasts for 2, 4, maybe 6 weeks, and then we kind of get a cooling off before we get into the inauguration day, and after inauguration day we see fantastic moves in the market. So the preferred moves for myself, in my opinion, would be that Bitcoin kind of finishes off this latest run, and then we cool off in the market and maybe go back down to $73,000 before rallying up in a really significant way in January, February, March. That would be the preferred kind of scenario that I would see unfolding. Okay, so let's take a look at these structures in a little bit more detail then, right? So if we take a look at this, what am I actually tracking? Well, I'm tracking the idea of a WXY pattern like so. Okay, and within here you would basically expect to see a 535 correction down, which in this case actually is another 535, another 535 up, correcting down 535, going up to this side as well. Okay, so taking a look at all of the structures, it's not actually that bad, and we are kind of looking at this through the idea that maybe we have a bit more moves to the upside, and of course I can be a lot more predictive than I have currently been, so let's go ahead and throw that in. We can see that this would be a potential higher move towards those slightly higher ranges. I would go ahead and just put a little bit of an overlap here, 63,539 to a slightly higher range of 88,039. I don't expect that overextension, but it's possible, so we'll keep an eye on it. But as you can kind of see, that would be the target for this continued run. Once that completes, we'll look for a retest, I think, of around 73 to 75k. There is a little interesting consolidation range right inside here as well. So if I go ahead and bring in that consolidation, right into the mix here. That's actually 74,416 to 77,199. That will be a very interesting place to see how Bitcoin's price reacts to that as well. Okay, so as we can kind of see, these will be the interesting zones. Now, from our momentum, you can see that we are overbought on the weekly, daily, 8 and 4 hour, with still some more potential bullish momentum on the 1 hour time frame. Okay, so we're good. We're up in the overbought area on the daily chart. Obviously, this is an area where we do expect to see corrections in the market. Okay, turn that off, bring in the relative strength index. The relative strength index is, of course, up in this overbought area. There was some hidden bullish divergence on the 4th of November. Good to kind of spot that one. You could see this rally coming if you saw that, and good to kind of see. Okay, now if we go ahead and turn that off and bring in the MACD histogram, this is what we were tracking before, and why we were talking about the potential for something big to happen. Okay, we were looking at this kind of consolidating in like so, and we were looking for a breakout or a breakdown. We saw the breakout of the histogram here with more bullish momentum coming into the market on the back of Trump's victory. Okay, so it's looking good. I still see another all-time high for Bitcoin before we kind of continue the runs to the upside. Now, if I come out of this and bring in my Bitstamp data, and I roll this up into a weekly time frame, this is the chart that shows the previous elections, right? I've been through this a fair few times on the channel, but if we come over to the election year of 2012, you can see that whilst there was an election that happened, we can see that it did have some green in the market, and then it cooled off just by the end of the year. Let me zoom right in here. Okay, so you have the election, okay, and you can kind of see it really kind of kicking off with the election, and then as we get into mid-December, we cooled off before we go into inauguration and all that wonderful stuff, right? So what I'm suggesting is that this little cooling off period, it isn't major, right? This particular correction back here in 2012, it was only an 8.5% move. It wasn't anything major. It's not something to be overly concerned with, but it does happen. Okay, if we move over, if I zoom out of this just a little bit, and we come over to the previous election, so 2016's election, you can see again that we ended the year strong. Okay, so here you can see the election happens in and around this area just here. We move up, and then we have a correction at the beginning of January before we get into inauguration, which then takes us up into that bullish market. Okay, so looking strong. That's 2 out of 2. And if I zoom out of this again and come over to the 2020, what do we see? Well, we can see again more volatility in and around the election. So you see election pump a couple of weeks. You see a correction that's due right here towards the end of the year, actually end of November. We saw a lot of volatility, pumps and dumps going on here until we kind of go into late December. And then from here, you go into a really strong January, a little bit of a correction in and around that inauguration. And then bam, you're off to the races once again. Okay, so that's 3 for 3. Where we are right now, of course, is in 2024. We are seeing, of course, the election going on right here. Okay, so you can see the election pump. We'll be looking for a cooling off, and then we're going to be looking for that 2025 inauguration pump. Okay, so what I've been saying is essentially is that we want to see the market kind of cooling off a little bit towards the end of the year. It doesn't have to be as aggressive as $58,000, but it does need to be, you know, a bit of a cooling off. I'd like to see 73 on Bitcoin. And obviously altcoins obviously correcting down after some fantastic runs as well, which will be all part of the process of going up in a really strong 2025. If we don't do that and we continue a run upwards, okay, into kind of a really strong early 2025, then I do suspect that what we're going to find is a rather large correction, you know, quite early on, like what we saw back here in 2013. We pumped up and then we dropped down quite aggressively before finally finishing the move to the upside. 2017, we didn't have that. But in 2021, you can see we pumped up early, we corrected down, then we pumped up at the end of the year as well. Typically, though, one of the things that I would point out here, guys, is that if Bitcoin history does repeat itself, the bull run peak has always been Q4 of the year after the election. That means that Q4 2025 should be a bull market peak. Okay, so it's looking good. I'm not concerned about the price action. The price action is looking quite nice as far as I am concerned. It's just a case that we have to be patient. We have to allow the processes to kind of play their course, right? I do look for Bitcoin to push up in towards our upper trend line. As you can see, if we connect all these upper points, that we do look for somewhere between $100,000 and $139,000. That it does depend depend on how much time passes. A correction at the end of the year would actually give us a more bullish target for a bull market peak. If we don't, then when we do peak a little bit earlier, there will be a lower price prediction for Bitcoin. So like I say, it's better to take the correction now than it is to kind of just continue this run to the upside. Don't go for the quick money, go through the process. The process is what is going to ultimately pay bigger dividends in the long run. Of course, it's just my thoughts and opinions on the data in the charts as I see it. You guys can let me know what your thoughts are in the comments down below, or join us in our free Discord server and we can continue the conversations down there. A link to the Discord is in the description down below, guys. You can let me know what your thoughts are on all of that in the comments or in the Discord. Guys, if you haven't done so already, check this video out right here. It's not one that you want to miss.